This is the Situation Room, the only way to start your day.
Who's making that hustle and grinding every day.
Okay.
But then again, there are those summer bunnies who are outside the country but supporting their families back at home.
Why are they called summer bunnies?
Summer bunnies because,
anyway,
because they come here during summer to enjoy the weather.
Oh, because then the bunnies come out. Okay, never mind. Okay,
Come on. So let's talk about them. They're grinding, they're hustling, they're making the money. But now question is, what exactly are you doing with that money? Because at the end of the day, you want to leave a legacy that will go beyond you and perhaps 2, 3, 4 generations to come. But for you to do that, you need to be able to be with a partner who has been in the game for a very long time.
Okay.
We're talking about Britam, who is coming with the Britam Whole Life Plan. And they've been in the business for 6 years, talk about 6 decades, definitely. They know exactly what it is they're talking about. So here we're talking about being able to receive immediate tax-free financial support at that time when you need that help. So we're talking about you've been saving, right? Over time, 15, 10, 20 years.
Yep.
And upon the time when that money is needed, you get it immediately, which is tax-free. And remember, we talked about at the time when you also have some difficulties, you got laid off from your job, you suffered critical illness. What do? They suspend that for you to be able kujipanga. Then when you come back, you continue with what? With paying your plan.
All right.
It's as easy as that. And you need to send an SMS. Where do you send it to?
21778, and you tell us where you are and send the word life.
Life, yes.
Life Nairobi to 21778.
Exactly. Or Life Kiambu
778. Yes.
But also, you can talk to someone on the other side, or you can also send a WhatsApp because everybody's connected.
Right.
You send that to 0705 100 100. There will be someone on the other side of the line who will be able to take you through the process and explain to you why it is not about if, but when.
Indeed. And whilst there is someone on the other end of that line, there's somebody in the studio today as well who will then be able to tell us what this person on the other end of the line will tell you as well.
Yes.
Dennis Moria is the General Manager, Business Development, Britam Life Assurance, and joins us in the hot seat of the Situation Room this morning. Good morning.
Good morning. Thank
How are you? You join another Dennis, so I guess we're in good company. Karibu sana.
Yes. Thank you.
So, of course, we're going to be talking about a lot of this stuff because we don't like to talk about death. But still necessary for us to do because, it's going to happen.
Yeah.
They say the one sure thing about life is death.
Yeah.
And through that, you can make it a little bit more comfortable, can't we? The other Dennis also takes us to a different African country every week. He comes back with their proverbs and chocolates. I get the chocolates. You get to interpret the proverb. Okay?
All right.
And it so happens today, we are in a land that produces cocoa, but not chocolates. We are in Ghana. Beautiful country. And when you talk about Ghana, you remember Kwame Nkrumah and his vision for the continent where they said, we are the first country in the continent to gain independence, but that will never make sense if that does not translate to the rest of the continent. And you look at where the continent is today, talk about African Union and working together, perhaps that ideology is being recognized a day at a time. But let's go to the proverb. Now, the stranger does not know where the village elder was buried. The stranger does not know where the village elder was buried. What do you think Ghanaians are telling us today?
The stranger does not know where the village elder is buried.
Yes.
Well, my interpretation of that proverb, let me take it to the context of our conversation today. You, as a key member of your family and the provider of your family,
Yes.
you're the only one who knows what your family needs. You're the one who understands the family values that you want to impact on them. And you're the one who's got the vision and the plan for them. So only you, who belongs to that homestead, can plan for that eventuality.
Well done.
Okay.
Message home, eh?
Oh, we know why you work for
We
them.
now know why you're there.
Where you
60
are.
years now, but now we know why. Yes.
Okay, so then let's get into that conversation, shall we? Some of the things that sometimes we get uncomfortable talking about, but then it's part of life, right? So tell us, let's start from the beginning. When we talk about the whole life plan, what exactly are we getting into?
All right. Okay. Thank you. So the Britam Whole Life Plan, or whole life insurance in general, is life insurance protection for your family and your dependents. So I think that's one of the key differences of life insurance compared to, let's say, for example, if you're investing in a money market fund or something, where you're investing for yourself or retirement planning for yourself. Now, this one, you're making sure that your people, in the unfortunate event of you passing on maybe early on, at a younger age, you're able to provide for them. So what are the things we're talking about providing? We have daily living expenses. Rent must be paid, food must be bought, children must go to school. And also the little and things that people enjoy about life, holidays must continue. So what you do is you buy a coverage amount, life cover. So let's say 5 million or to 100 million. And probably I could add, how do you determine how much, for lack of better, is my life worth? All right. So usually a rule of thumb is say, look at around 4 to 8 years of your annual salary is a good amount to think about how much you need to cover.
4 to 8 years.
Yes, depending on your ability to pay. Yeah. So think about that range. That's a good number to think about. So if that 4 to 8 years ends up to, let's say, like 20 million, then that's the good coverage amount you should buy, so that in case you pass on, then your family is paid out that 20 million, and they can be able to appropriately manage that money over the long term to make sure they have they have money for their daily living expenses. So whole life, one of the unique differences compared to other things we call like term life assurance is it does not expire. So pay for a certain period of time. You can pay one-off if you want. And then you can also pay for 10 years, 15 years, or 20 years. Then you stop the payments. Then you're on cover for the rest of your life. That way, even if you live to 100, then your children or your grandchildren have money to help them take off from a certain point. Things these days are quite expensive. So even think about owning a home. So you can set up your children for that, for example, isn't it?
Yes. Yeah. So, we live in a very interesting demography as Africans, So we're here, we're being told whole life plan is great for you because it is helping the generations to come. You've set them up for prosperity pretty much. I hustled, I did the grind, but I'm here making sure that, my future is secured, ecosete. But we also find a demography that doesn't want to talk about life insurance. They just don't want to pick it up because, like Ndu said, we don't want to talk about death. Why is that the case?
I think that's one of probably I would say there are many things that we have that within our society that impact why the life insurance uptake is low in Kenya. And that is part of our culture. We are afraid to talk about death and openly and plan for it, and because it's been a taboo. But I can see probably we're making strides in terms of thinking about how can we be able to have that conversation openly, especially when we see those who've gone, and especially you've got very prominent families, and you can see how their children fight over their parents' property. So I think the question is, do you want our children to be friends and work together after we part, or do you want them to be enemies? So I think that's one of the things about maybe we need to inculcate maybe in our values today and say, how do I make sure that if I go or when I go, that my family is at peace and everyone is happy with what they get? Yes.
Okay, so let's take a couple steps back. So now, understanding what the whole life plan is, understanding why maybe people are worried talking about it, what do you do at Britam?
Myself as Dennis.
Oh, as Dennis and
as Dennis Moria.
As Dennis Moria.
Oh, okay, yeah, we got to clarify that.
As Dennis Moria. All right. So, okay, a bit of an introduction. So, Dennis Moria. So, I am the general manager for business development. So, I oversee basically the sales and distribution revenue growth for Britam Life for the life insurance and pensions business. So we've got many solutions across the board, even outside our life insurance business. So within the life insurance business, we've got pensions and retirement savings. So we can have a conversation about that. We also can have about education planning, savings for other goals that you may think about, let's say buying a car, a house, or any other area of interest that you may have. And then, of course, we have life insurance here we're talking about today, whole life being one of the products, and we've got what do you call it, other term life products as well. Okay, but also we have got other financial solutions like money market funds,
right?
Insuring your vehicle, insure your home if you do travel, we do offer also travel insurance as well. So any types of insurance that you can think of, we have them available. So even if you have a plane, we got you.
Yeah, Dennis has a plane. So when you imagine these different sectors that the insurance then is able to offer in Kenya, what's the uptake of insurance at the moment, and is it encouraging or discouraging?
Oh, the numbers, when you look at them at a global level, they're quite discouraging. Penetration overall, I think, is way less than 3% for both what you call property and life insurance. Combined
of the Kenyan population,
of the Kenyan percent of GDP.
Okay.
Yes. So the amount of money we spend on premium versus the annual income for the national for the entire country. Yes. So it is not encouraging, but we are far better than a few other countries. We are not the worst, but the other countries which are doing far much better, especially in Africa. Of course, South Africa usually is the leading country around there. But Kenya is not too far, but we still have a long way to go in terms of making sure that we do able to provide financial security for ourselves. Yes.
Yep. Why do you think that is? Sorry, Dennis. Apart from the whole life plan, if we don't want to talk about death, but why do you think it is that folks are not thinking about taking and putting away something for later?
So, one, let me put it, 4 key things that I would say that are the major one is around affordability. So when it comes to prioritizing the wallet for the average Kenyan, of course, you've got food and now the popular topic of fuel and other things. But though affordability has been an issue, despite this year, even previous years, it's been an issue. So that's one of the main areas around that. The next one is around trust. So are you sure we will pay this money that we promised? Okay, I think that's a big thing that we do need to work on, either from also an awareness perspective and also from ourselves as in this industry to provide that comfort. And we also able to demonstrate that we do pay. So usually it is best to be referred to an underwriter or provider who does make sure that they are paid. All right. The other one is let me call it general awareness about what are the benefits of life insurance or any type of insurance. And I think we're very well informed about banking, what do you call about it, investments. Those ones, I think the Kenyan population is doing a good job, or we are ahead in that. But risk management, protecting what I have is becomes a difficult conversation. But we do need to work on the awareness in that area. So I think in the long term, there's an opportunity to make sure that we do align all these different gaps that we do have. So making sure that there's good information, we address the trust issue. And also, as an industry, work on affordable, relatable products that the average Kenyan can buy. And that's why we are here today.
So let's talk about different types of insurance. To just lay the case, anybody today would talk about, I want health insurance because I fall sick quite often. Sickness is there, so I want that packaged. I'm driving a motor car or my bike, right? I can't be on the road because NTSA on my neck. I must have that insurance.
Yes.
But when it comes to life insurance and talking about then legacy, that is a gray area where many say, hey, what are you saying? What exactly are you saying? So for those of us who do not understand how critical it is in terms of legacy planning and the need to have life insurance, why is it important then to switch and start saying, as much as you have health insurance, which is great, and you have motor vehicle insurance, it's important for you to plan about your legacy and the future through the life plan?
No, I do agree with you. And I would say it's bring the focus back to you and probably accepting, I am a mortal. And there are these people that I love and cherish very much. And these are the people who have been working to make sure that they have good health insurance. That the people why I bought that big car so they can be driven wherever they need to go.
Comprehensive cover.
Comprehensive cover. When they go to hospital, the best wing in the hospital. But if you're not there, your savings will take them for 3 months. What about after 3 months? There'll be a rambe for the funeral. After that, people will be gone. So yes, what will your spouse do? What will your children do? Maybe even their parents and other brothers and sisters who depend on you, what will they do? Yes. So it is important to make sure that you do have that life cover in place. And we also have other products which complement it, such that in case you're not too sure or you're not confident they're able to manage their money, we do have what we call trust services as well. So the money can be paid into a trust, and the trustees now pay for the daily living expenses. So your job is just your beneficiary just comes and brings the school fees. Let's say you've got a brother, maybe you're sure he doesn't take care of money very well, but you're going to enjoy it. So all they need to do is just be bringing an invoice for school fees, and they'll sort out your child. Bring the invoice for rent, and the trust will pay out for the rent. If it's about shopping, they'll give an allowance and say, fine, bring me receipts in your back. That way, you're sure that your child will be well taken care of. Then your child turns over, let's say 21, 25, depending on what you decide. They get the balance of the funds to go and manage and live their life.
How do you start the legacy planning conversation whereby a trust would come into part of that for the future? But where do you start from if you've never saved a dime in your life and you're realizing, okay, snap, something could happen later? How do you start the conversation? Where do you begin? What do you put away? 500 shillings? 5,000? What do you do?
Okay. Let me say, if I was to take the legacy planning discussion to a bigger picture, even beyond the whole life and the trust, I would say many families in Kenya are already in the process of building wealth. Okay? You either have got your plot somewhere, you have your savings or investment somewhere, you've got your vehicle. Okay? Those are assets which are of significant value. Okay? So you could start from the basics of, let me put down a list of everything that I do own and have a will prepared. Okay? Over and above that, you're very clear about what needs to be done. Okay? Then the question is what I have enough to take care of the family? Okay? Then I said they gave an estimate of how much you should be thinking of making sure you can protect them. 4 to 8 years of salary. Depends on your age. The older you are, then the fewer the years. The younger you are, the more you need to set aside. Yeah. So those details we can come and have a one-on-one discussion with Britam or any other provider and a financial advisor as well. Then you can start saving up. And even here at Britam, you can start saving with as low as for a whole life product for 3,000 shillings per month. Yes, to get a cover of 5 million shillings.
Over how long?
10 years. You pay for 10 years. So if you do 5 million times 120, that comes to approximately 600,000 or so. Total payments.
Oh, you would pay a total of 600,000 and you would have a cover for 5 million?
Yes.
Okay, so let's do some.
Yes.
So you pay 3,000 shillings. This is just as an example. If you wanted to do something to get 5 million, Bob, you pay 3,000 shillings a month for 10 years. At the end of 10 years, 5 million shillings is given to whom if you're still alive?
No.
Okay,
You get 5 million shillings growing at 3%. It'll come when you pass on.
When you die.
When you die. Not at the end of 10 years. You stop making the 5,000 shillings payment at the end of the 10 years.
10 years.
But now, you've planned for your family in the eventuality you're not around. But if you're still alive, you're still working, you're still making money, you can still provide for them.
So what happens to that money? It has to wait until you pass on?
Until you pass on.
Okay, so say that again, because I'm sure that flew over the head of a lot of people here.
All right.
You're paying 3,000 shillings per month.
For 10 years.
For 10 years. And what you are for a payout of 5 million shillings when you pass on.
Yes.
And so, because this is what is growing at 3%.
Yes.
So if you don't pass on, where is that money?
No, you will pass on.
No.
Yes.
At the end of 10 years, you've not passed on.
Yeah.
Oh, no. We keep the money as Britam.
Yes.
So that's why we build what we call our reserves. All right. And we pay out on any death at any point in the year. Yes.
Okay. So obviously your people must know that there's such an agreement here so that in the event that something happens to you,
Yes.
somebody can then go say, hi, Britam, this has unfortunately happened. How can we start getting into this, right?
Yes.
Because you would have left instructions.
Yes.
Okay.
You should leave instructions.
Yeah.
Yes. I think that's why I started off from like a will and any other documentation. So
Yeah.
your policy document should be one of those
One
things.
of those things.
Yes.
Okay. Now, what are some of the factors then that have to be considered for you to start? Do I just say, well, I can put aside 5,000, I can put aside 10,000, and we can just go for it? Or are there other things that you have to look into?
As an individual, when you're coming to buy it, I would say first look at how much you can be able to afford. That's a good starting point. But also think about how much coverage you do need. I gave the ratio of 4 to 8 years. And in my view, you can be able to, even if you can't make it, let's say, to the 8 years and you need to, and let's say you planned for, say, 30 million shillings, but the premium I have can only buy maybe 10 million. Start with the 10 million. It will be growing by 3%. Maybe your income and circumstances will improve within the next 3-5 years. You can buy the additional 20 million at that point. Yes. So the maximum age with which you can you need to buy a whole life cover is by the time you're 65. Yes.
Yeah. And I mean, I think for a very long time, insurance as well, unfortunately, how many have looked at it is for the older generation. You know, the way people look at it, it is them who need it. You know, it is them because they're the ones who get sick and all that. But here then we're being told, when you talk about whole life plan, the younger you are and the earlier you start, the more affordable it is for you. Because then you will pay less for a very long period of time, as opposed to when you're getting in there at an advanced age, you pay more, and even the benefits might just be less as compared to a person who's getting there. So one then asks the question, talk to us on the need of starting early and the benefits you get for doing that.
Okay. All right. Good. Now, I think you've covered it very well. For insurance types which depend on your health, like life insurance and health insurance, the younger you are, the cheaper your premiums are.
Yeah.
For the simple reason, not even because you'll pay for a shorter period, it is because youth confers you with the benefits of long life, and you're quite fit.
Yeah.
Yes. So the likelihood of you passing on, besides an accident, due to poor health, are very low. Okay, so the likelihood of you passing away because of poor health is very low. So even when we, as actuaries, look at the mortality graphs, young people are down here. As you grow older, things change significantly. So that is the main reason why. And if you start young and you are saying only pay for 10 years, so the 20-year-old or a 30-year-old who pays for 10 years still is comparable to the premiums will be paid by a 50-year-old who needs to pay for 10 years are significant. Could be three times the value of a whole life product. Yes.
And even when you talk about that, when you talk about the 3% interest that grows over time, so if you finish at, say, start at 20, by the time you're 30, the 3% will carry through the entire time.
Yes. In fact, you'll realize the impact of compound interest at 3% is amazing. 3% sounds low, but at 30, if it's 20 million, if you live to 80, it could end up being 100 million.
Okay. What if somebody's terminally ill and they know, but they take on a whole life plan?
Oh, okay. So, so if you're terminally ill, we've got what we call additional optional benefits, and there we have critical illness, and critical illness covers many types of terminal illnesses. So if you have cancer, stage 3, stage 4, you're given a payout. If you need to go for a major organ transplant, for example, like kidneys or anything else, it's a payout, or a stroke, there's a payout.
Aside from your lump sum later kind of thing?
Yes, it's in addition to, so you can get the payout now, so that it can help you deal with the costs of that particular terminal illness. And a few years later on, if you when you pass on, you still get the whole life benefit, which goes to your family so that you can continue the legacy
I like
planning.
the way Dennis is just sure that we are going to pass on. And he keeps saying that he will pass. Okay. I've forgotten that we don't like to talk about these things.
No, you must make it comfortable. It's the truth.
Yes. Yeah, because this takes us to our next conversation about affordability. Because let's just if affordability would be given a song would be Narudi Ocha. Bei ya mafuta imepanda siwezi narudi Ocha, And when you talk about affordability of whole life plan at a time when cost of living is high and many do not afford that, bring us to a conversation around affordability for those who want to get into it, because many would say, I'm looking at the premiums, but kidogo affordability is a problem. So is it affordable for middle income earners, for those who want to get into it? And how does that conversation then start?
Okay. I think the straight answer from my perspective is for middle income earners, it is affordable. I would say it is, let's call it a trade-off.
Mm-hmm.
So probably at a minimum, you're spending, you're even saving maybe, let's say, 10,000 shillings per month on, let's say, you're depositing it in a money market fund or in your savings account. So I'm just saying, pluck 3,000 shillings, for example, and do for protection. You see, now you'll get cover for 5 million. All right. Then you can be saving the other 7,000. Yes. So, like we've been talking about, when you pass on, this is the 7,000 may not materialize to the equivalent of the 5 million.
Okay.
All right. So even if it's 10 years or 20 years from now, the 7,000, even if you're earning 10, 12%, may not make it to the 5 million.
Okay.
Okay. So it is important to now think about what are the trade-offs you can make even within your current financial planning framework that you do have. So not necessarily eat into your money for food and fuel. Yes, just reprioritize.
Okay. So does it matter the number of beneficiaries that you have? Or are some of those things taken into consideration to help you then realize or say, this is how much? And what the actuaries, the folks who are looking at the numbers and making the predictions and all of this, do they say, well, this is what you need? Or is it completely based on what you're doing now? Because maybe somebody's taking this and they've got one child today, and then during that 10-year or how many ever a year period of the term, they have another child. How do you then deal with the science, or is it meant to take care of predictions with your current situation?
Thank you for that. So I think our general advice is usually start with your current situation. And the good thing about our products is they are flexible and you can always top up. So like the scenario that you've given, for most people, on average, at least life progresses at least upwards, maybe some very fast, others, but at least in a decent linear manner. So earnings do improve over time. And of course, families do grow. So I would say you plan with the circumstances that you have today, but always have an annual or every 2 years review your financial situation and say, is the initial plan I have working for me? What has changed? And do I need to change one or two things? Yes. So continuous review of your financial plan is necessary. You can't do it once and forget about it. Yes.
So United States, America, I'm doing my thing there on events too with Ndu back in Nairobi. And many ask the question, as a summer bunny who's not here, but I want to continue with the legacy. Where do I start from? How do I get to be on this, despite the fact that I'm miles and miles away? Because many usually, when I want to come back home, I want to come back to Kenya and rest, because I toiled out there, but I know that I have something on the side. So how do that conversation start with those who are outside?
The beauty is we live in 2026 and communication is fantastic. And even our technology platforms are well available. So if even it's a simple SMS to 21778, they can say where they are. It doesn't matter. As long as they are Kenyans, they can be on cover immediately. So we have electronic application processes, electronic payment modes. They can pay us with Visa from the US. Yes. And every Kenyan in the unfortunate event of even a death happening, they still can get a death certificate and claim their benefits from any part of the world.
Okay.
Yes.
Yeah.
Yeah.
And as I'm doing that as well, so there is the unfortunate aspect because life is also progresses. I'm paying that. Say it is 10,000 a month. Unfortunately, I lose my job. So paying that 10,000 bob becomes a little bit difficult as I look perhaps for another job, or I become critically ill. That my focus now shifts on me feeling well,
or
getting well,
whatever,
or disabled. How does that conversation start so that I don't lose what it is I have? And what happens if I'm unable to get back on the platform?
Okay. So the good for when you become ill or permanently disabled, what happens is the one of the benefits of the product is to make sure that you first compensated for that terminal illness or disability.
Okay.
Then we waive future premiums for the legacy planning portion. So you continue benefiting from that. So you're no longer compelled to make any payments. You're not required to make any payments. Yes. For when you have lost your job or any other issue that's not health related, you've paid a certain proportion of your premiums, then you'll be entitled to a certain proportion of that legacy benefit. So if you pay 50% of the premiums, then you'll get 50% of the benefit. Okay. If circumstances change, you come talk to us and we can begin a discussion about payment of arrears, and then you get back to the 100%. Yes.
Okay.
So with things that we cannot see, it's difficult to then make a commitment to, like you say, okay, it's going to come later. And so that it's like people who you take insurance for health that you've not been sick. So you're like, okay, well, I'm not sick. So when I get sick, is perhaps when I'll do something about it. What are the dangers of thinking like that?
So the main dangers I would say is so you're living one day at a time. So you're exposing yourself to these unfortunate circumstances, things that you'll not be able to control. Okay. So let me say legacy planning will give you, for lack of a better word, powers even from your grave to make sure the right things are happening. If you don't have that, then you're leaving everything to, what can I say, to good or bad luck and to the fortunes of the world. And I would say this is not good especially for parents of young ones. Now, those are the ones who are very vulnerable and may not be able to defend themselves against certain other people taking advantage of them. So it's important that you plan for them. That's why I say even this product is more important for the young than the old. Right? The older the children have grown up and have got a few wits on how to survive. Yes, but when you've got young kids, that would be very unfortunate to leave them to the world to decide what to do. Yes. So to me, that would be it. So have a plan. That way, your children do not suffer, and everything that happens to them afterwards is very predictable and it's on the positive side. Otherwise, everything you have done will go to waste.
Yeah. Because you see, we hustle, we grind every day to make our lives. For your information, I'm ambassador for good life today and in the future. I keep telling you, at the time when I'm not here, I don't want my ghost to struggle on how I left, on how the people I've left will be leaving. Yes. So this is an important conversation to have, and we also talk about the fact that transfer of wealth, especially in the country today, we see what happens in the wealthy families and how difficult it is to pass that from one generation to the other. Now, here we have a plan based off what you've talked about that secures that future. So, in the event that I'm gone, is it open for me then to leave instructions on how I want that money to be spent, on what exactly it will do? Because then again, failure to have that or to disclose to my family that I had this whole life plan on the side, how will they know about it? So what responsibility then or assurance will I get that in the event that I'm not there, you will take the responsibility to disclose and let my people know?
Okay. So in terms of, so there are various ways you can have the payouts made to you. So one of the benefits, for example, of the whole life is that you name a beneficiary.
Okay.
So you'll say it is do getting the money and the percentage could be 100%. No one else but do will get the money.
Okay.
All right. Do will just come with her documents to prove she's due and she gets the money. No discussions about going to court. If somebody's not unhappy, straight to do.
Yeah.
So that's great when the beneficiary is an adult. What we recommend is when, for example, it's a minor or a child, then now we complement it with a trust. Okay. So the money goes into the trust, and that's why you set out specific instructions on what should be done for the child or the children. Okay.
Yeah.
So you'll say, I want this money to be paying for A, B, C, D, and nothing else. And when they become a certain age, 25 or whatever number you think is suitable, or create another hurdle, they must have graduated university and gotten a job.
Important.
All right?
Yeah.
Yes. And then they can unlock the money, the full lump sum.
Yeah.
Or the remaining lump sum, isn't it? And even during while it's in the trust, we invest it and it earns a return. Okay? So that it beats inflation at the end of the day. So that's when you can be able to leave those instructions. So what do you recommend? So once you take the cover, what I believe in personally is being transparent with the beneficiaries and saying, yes, you are protected. This is what I've put aside and set for you. And the records are here. Be aware.
A lot of, also one of the things that you mentioned at the beginning as to why not a lot of people take on insurance in whatever shape or form is that they have trust issues. That how do you know that the money that you put aside, whether it's 3,000 or 3 million, is actually going to be kept, used, come to your people at the end of the term? Because guess what? You're not there, so you're not able to confirm, right? So how can we be sure? How can people be sure that this money that they put aside, whether it's for this whole life plan, whether it's for the other things that you spoke about, will actually come to you? Because you're taking a risk, aren't you?
Yes. So I would say, yes, there are two risks you're taking on. Is on the provider side. So for example, like Britam. Will Britam pay? Isn't it? I think that's probably the biggest one. Yeah. So I would say what you do is do your homework around who the providers are. Confirm, do they pay? Who are they paying today? Who have they paid the last 5 years? So like come to Britam and see our records of payments. Even come see our financial statements. You'll see most of the premiums that we get go to paying claims. Yes. And there are many testimonies around that. So a good benchmark is probably what is the past practice and the people who've complained about not being paid. Why are they complaining, and understand the circumstances? And also we do give you clear information around that. Also, there are many consumer protection bodies around in the industry. So you can go to the IRA. They're very vibrant and proactive. So if there are any complaints, you can go there and make sure that you are compensated. If an insurance company collapses, we do have the insurance protection fund under the IRA, so which makes sure that we pay like a premium to them also, so that now in the event of any underwriter collapsing, then all policyholders are compensated. Yes,
How are they compensated?
By the policyholder protection fund.
No. I mean, like, is there going to be now a story or fairy tale later? Well, the thing went down, so we're going to give you 50% of what you paid in. That's what I mean. But how are you compensated in the event that something should go belly up, and you've paid that premium to the IPF?
Yes.
How then are you given back everything that you've put in?
So it depends, all right, on the insurance product.
Okay.
So if it was one where you're supposed to pay premiums continuously, until the end of the term, you'll continue being on cover up to the end of the term.
Okay.
All right. So you're on cover for that. If that's not possible, then they pay you. They make a payout of what you've paid out before. Then you can go and continue with another provider.
Okay.
So it's usually a continuation of cover or a refund of premiums. Sometimes not 100%, but a reasonable amount.
Okay. And why would any insurance not pay claims? Because you said if you talked about a large percent of the claim payments, of the premiums that you receive are going towards claim payments.
Yes.
And so you pay, right? And this is important to know, Dennis, because you pay. So under what circumstances would you not pay a claim?
Okay. So we usually have the contract which states what are you exactly covered for.
Okay.
But let me talk about life insurance. So usually these days there's not really much in terms of exclusions per se. You'll even realize even things like suicide. Before we used to be very strict about those particular parameters, but these days we are not. So before, like, you'd be told if you committed suicide within 2 years, there'd be no payment. So right now it would be probably a shorter period of time, let's say like 6 months or 3 months. Okay. So that we make sure there's no moral hazard, because others will not be a sustainable business. With that kind of practice. Okay, so we are recognizing such things. These days, exclusions for things like HIV, AIDS, and stuff like that is no longer a critical issue to deny a claim or even
so
deny
you cannot deny somebody who's HIV positive,
even to take up the policy.
You can't deny them from taking a policy where previously you would.
Yes.
Okay.
Yes.
Okay.
Yeah. So there. At best, maybe not be on cover for 100 million, but a small amount, maybe at most to 10 million or 20 million per se. Okay, so you'd be on cover for that. And these days it's quite manageable, especially with ARV. So many are living long and fulfilling lives. So it's no longer the scare that used to be there, let's say 20, 30 years ago. Yeah.
So I want to look at, most of the time, whenever Kenyans or whenever individuals are getting into these policies, there is always the fear that the policy document is too difficult to understand that many usually just sign on the dotted line.
Right.
Because you look at the document and the legalese language in there and you're like, yo, this one is meant for a senior counsel. Yeah. This one is meant for a senior counsel, or an underwriter who understands the language. But here then we are saying, for me to be there has to be trust. I have to be sure of what as well I'm getting in it. What's the responsibility then that if I'm taking a cover with Britam, that everything will be disclosed, I get to understand. So what responsibility do you take in ensuring that every customer, every policy holder understands the document?
Okay. No, thank you for that question. So we've got a well-trained team of financial advisors who do give the information and break it down to the individual at their level of understanding. And even we work across Kenya, so even in multiple languages, that is broken down, especially at the financial advisory level. We have our various disclosures that we do have, especially with our product documentation, brochures, and which summarize the key benefits. And that's even, I would say, more important than the lengthy policy document, because usually, in fact, that is a standard we commit to ourselves. So what you read in the brochure is what we will give you, all right, as Britam. Over and above that, if you've got more questions, we've got a very robust customer service team. You can call and ask for clarification on what you do need. And then also we do what we call what's called client education and awareness. So we usually send out tidbits of communication around what your product is and how it performs as well. But I also like to provide comfort, especially like on life insurance. There isn't usually a lot of exclusions these days. So we've got products of where if you don't go for medical underwriting, you pay a little extra premium and there are no questions asked, let's say at the point of making a claim. Okay, and then if you go for medical examination, even better. We have no reason, because now we know everything.
But let's on medical investigations. Say we are two interested customers, right? I have gone for my medical examination today as opposed to another individual who has not. Does that then have any differences on the policy? What does that mean on the overall uptake of the same? Are there any caveats on that?
Yes, we've kept it quite simple,
Okay.
So the only difference will be in terms of the premium that you pay. Everything else remains the same.
Okay.
All right. So the person who decided to go for medical examination, if they're in good health, they'll pay a lower premium than this other individual.
Okay.
All right. If the health is a bit more deteriorated compared to this other person, usually then we'll load some risk charges on that. But then we do disclose that, and before even you issue the policy, you must accept the new terms.
Okay.
So once you're happy with the incremental premium because of maybe you've got maybe some diabetes or high blood pressure or any other thing, then everything else remains the same. The terms and conditions of payment are the same.
And what if I just refuse to do a medical cover? But
we do have an option for you,
Okay.
but you cannot buy beyond a certain limit. So
Okay.
if you wanted cover beyond, I think currently it's 15 million shillings, then that's a ceiling for you.
Okay.
But if you want to buy 20, 30 million shillings, then you must go for medical examination.
Okay.
Yeah.
Okay.
And if you want even more than 100 million, then yes, you can come and we have that discussion and you go for extra medical reviews. Yeah.
Okay. Can you pay for some of these things up front instead of saying, say you run into some cash, you did a job, you did a gig, and you got some cash, and you say, okay, well, I want this thing for 20 million shillings, whatever, and
Just
this is going to be
a tender.
right? And then you say, okay, well, I've got the extra cash, and I want the 30 million whole life plan. Can you put the cash up front, pony it up, and say, okay, let's do the thing, go, so that you can now use your salary to do other things?
Oh, yes, no. As even as a GM for business development.
You like that kind of thing,
So let me give an example, for the 20 million cover. So depending on your age, you could, and these are broad range, let's say 30 to 50. Then if you're on 20 million cover, then you'll pay probably between 15 and 30% of that 20 million if you paid upfront. So what is 15% of 20 million? 10% is what, 2 million? 3 million.
3 million, yeah.
Yes, 3 million. And you've got 20 million cover.
Yeah.
And you don't pay anything else.
Yeah. You just wait until the bell tolls.
Yeah, you just wait for Parapande. And you see, at that time, then as well, if I paid up front, the interest starts compounding immediately.
Yes.
Oh, all right.
Yeah, the 20 million grows by 3%, not the 3 million. The 20 million. Yes. It is a 20 million that grows by 3%.
Oh, hold up. Just a minute.
Yes.
So it's actually not 20 million. It's more.
Yes. The longer you live, the more you get.
The more you get.
Okay. So you take it when, of course, that's why it makes sense to take it when you're younger. Because then as the more you live on that 20 million shillings, you could end up getting 100 million bob.
Yes.
Depending on,
how long you live.
On how long you live. All right. Let's eat omena and duma. So, okay. all kind of comes together. One of the things that we also find, just because of the job that we do, is that people will not embrace something that they do not know or understand. And it's also very difficult to let people know something late in the game. So what am I saying? How early do we start to have insurance conversations? Because you started off by talking about that it's not just the whole life plan that you talk about. There are other things that you have in place, education, motor vehicle, health, all sorts of things. But the insurance conversation usually starts when somebody has a job. And they're pretty well ahead in life by the time they've done that. We know that people get jobs very early, it's possible.
Yes.
But my point here is that how early in the system do people start to understand the concept of insurance? And I'm talking about at school. How do we start to have that conversation so that you get to understand that, okay, this is actually something that can help you later and that you can work towards leaving something for later? Because by the time somebody is 24, 25, they're set in their ways.
Yeah.
So how do you set this in the ways of somebody when they are younger?
That is a good question. I think when I reflect on my youth, I remember there's a subject called commerce in high school, and at least I remember seeing insurance there. And that's what inspired me to get into this career.
Okay.
All right. I'm not too sure about what is taught in high school right now. But I think probably it is probably as a society now start thinking about how do we do financial education for our children.